the Q3 results. You go through them today. What is your feeling with them? What you got?
Well, I would say, as I said in my summary, it is progress, but it takes time to build a beast. So we're always hoping for better. But the recovery from the pandemic had a slow start in the quarter.
Yeah.
But it picked up pace.
Sure. And you mentioned the global freight situation.
Yes.
What is the dynamics of this situation in China and the global trade?
The signals of or the anticipation that there could be disturbances and problems have been out there for a while, but the dynamics of the freight cost increases and one crisis after the other was surprising to us. So we actually increased prices again and again to our customers, and then to catch up with that. And I think that there is a broad understanding in the market in the dynamics thereof. So I think we are in a balance and we will be back on track.
Sure. Okay. So for the 5-year plan, it seems that there's quite a gap still between the, let's say, the EBIT margins of today and the revenue growth that you're expecting to deliver on. Where are you on the 5-year plan in terms of that tracking?
Yes, we believe we are tracking. In the 5-year plan, we anticipated a recovery from a pandemic, and we also anticipated a gradual and broad acceleration of activities, which is, we look at the leading indicators thereof, and one of them is, for example, export to Europe, which is an important driver for that. That is for the organic plan, and now we'll have to up the stakes with EFUEL as well.
So, from the audience, do you feel that the guys have answered all your questions so far? Is there anyone? Yeah, thank you.
Hi, Eric from ABG here. So first off, on the price increases, will they be in full effect for Q4? And what sort of magnitude of price increases could we be seeing?
You asked for if they will be having effect in Q4?
Yeah, full effect for Q4.
Yes, we believe so.
And what sort of magnitude of price increases could we be seeing?
Horrendous. It's a short answer.
Okay, good. And then just a question on own brands as well for the quarter. I mean, a bit weaker than we could have expected at 8% growth. Could you go into what sort of mix happened within the own brands? Which sort of segments within own brands were strong, respectively weak?
Okay, you mean within own brands?
Exactly.
Yeah. You could say that within own brands, some of the B2B business was a bit slower than expected. And there were a number of public tenders not taking place for schools and offices, etc. So that was one part of it. And then gaming categories has gone very well, continuing to go well. Smart home has gone well. So the own brand business is has been developing more or less according to plans. So I feel quite confident with the Q3 and where we are and where we plan to be. Briefly.
Okay, very good. And then just one question for you, Rasmus.
Yeah.
On the relationship with Easy, what sort of exclusivity do you have? I mean, I've seen Tibber for one able to distribute their products. Are there others as well, and do you have any superior terms to others?
I think the name of the game is to be the best. In a short answer.
Thank you. Anyone else? Yeah. The mic is coming around.
Yes, hi, Mikael Avdal, Fria Fonder. So, is it possible to say how you're performing versus the market in this quarter? I mean, everyone is facing the same type of problems. Maybe the large ones are faring better than the smaller ones in this environment. But do you have any market data to look at?
Yeah, well, we are facing different competitors in different segments and with different business models. So the question is, have we lost market share or not? That's basically the question. Well, maybe if I ask Philip, what is your point of view of an answer to that? Because it's a complex question.
There we go. And we have Philip, the CFO of Dist IT, coming on with an answer.
Hello. Good question. But as Robert mentioned, we have different segments, different businesses. We have Septon, Aurora del Taco. They're exposed to different dynamics, but also customers and markets. We have going into sort of the own brands. We have gaming. We have electric vehicle charging. We have the cables and call it B2B business. And I would say we are not losing shelf space with our main customers. I think that's the conclusion we have internally.
Yeah.
So we keep our market share, but it's hard to sort of distinguish exactly the growth of our unit compared to markets because it's so scattered. But our internal conclusion is that we're not losing out on shelf space.
One more question from me. You're building inventory in the quarter. Why is that actually? I mean, I guess customers are, or everyone is screaming for a certain type of products, at least, whereas there's a scarcity. So is it because you're not selling some product because others are missing to customers? For instance, in the gaming segment, I would assume that if there are no graphic cards or no PCs out there, you're not selling other type of gaming related products either. But and on the inventory then, do you expect a release already in Q4?
We have there are two things. One important thing going on in the spring season was that we saw that lead times were starting to prolong. And when they start to prolong, then usually that is a wave after wave start to hit. So we saw also price increases starting. So we were planning that what do we need for Q3? So we made forecasts. So we bought against what we plan to have a sort of business and to secure the supply chain of own brand goods. Because for us to have the goods for the high season in Q4, we made those, we placed those orders already in May for deliveries in December. And if you order now in China, now we are in October, it will take you 7 months or 8 months if you don't have placed binding forecasts. So the supply chain situation is quite complicated. We did a similar turn last Q4, where we took a reservation bet, you can call it, on the market that we should stock up on own brand goods. And we saw that the market was drying up of supply of these categories. So we had a hell of a market and season. So because it takes a lot of capital to do what we have done. It's investment, which we believe is sound.
And you had a follow-up question as well, meaning, so how far do we believe that it will take us to see stock coming out from our house also?
Oh, we will see that in Q4.
Yeah.
guess you're in a good position to gain market share because of the strength you have to actually been able to build this inventory ahead of high season.
Yes, I mean, you can say that in a situation of scarcity, the distributors with availability will be the winner.
I can come back.
Hey, Emil Ponnert from Ladsmart. Rasmus, I have a question for you, I believe. On impressive growth, 287% for the past year. Interesting. What is the composition? You said that between housing associations, companies versus the private customers. But what is the most which segment of these two are the most is the most interesting, and why?
I think homeowners has been in charge of driving the transition. It's also been somewhat, if you look at the property owners and household associations, they're lacking the understanding for the need of charging in bigger parking spaces. Recently now we saw Stockholm City also talking about rolling out 50 to 100,000 chargers in Stockholm. I see both public charging and household associations and property owners to be the next wave. I think it's one of the most interesting areas to be looking at the moment.
I think that's good enough. Thank you. Another question in terms of the international expansion. It goes a little bit to what ABG mentioned here. You say Denmark, Finland, Germany, that you plan to enter those markets. Something that has been a great advantage to you is the relationship, the partnership you have with Easy, and it's a great product, I understand. Will you have the same exclusivity on these new markets? Because I understand, at least in Denmark, maybe more countries are already there.
To clarify, I don't believe. I mean, we are one of the preferred partners to Easy, based upon the belief that we should be the best, and that's why we're working together with Easy since it was just an idea. I have the full support of moving into new markets throughout Europe, so I don't believe that should be an issue at all.
All right, thank you.
We have another question on the front row. Yeah?
Jörgen Dahlén, private investor. About these horrendous price increases you mentioned, Robert, what is your ability to pass on these price increases to your customers? How is your market strength in that respect?
It's very good, actually, because we cannot give the freight costs away, and the customers understand that, and it is it's a general trend in the market, and we don't and those who don't do it will suffer really hard. So there is a good understanding. It was in the early days, in the first part, we were quite early with the increases. It took some time to convince the customers and explain to them what was going on, but then gradually they understand the dynamics.
This means that on net speaking, this will not lead to lower margins for you in the medium term.
We don't expect that at all. So we will see a recovery back to normal, and in the end, it will be the customers who will be paying for it.
A very simple question for clarity to Rasmus. By housing associations, you mean in Swedish bostadsrättsföreningar?
BRF, yes.
Yeah, thank you.
Perfect. Any more questions from the crowd as of yet? No? All right. So, Rasmus, the competitive landscape you look into right now, how is it like? What is the dynamics of it? Can you take it through?
Yeah, well, I've been in the market for a long time, so I would say that I was a part of building the market. But today, it's a highly competitive market. I would say that our biggest competitor is actually the guys who delivers the fossil fuel and the petrol stations out there. So we're kind of fighting the petrol heads, trying to change their perspective on how to drive and how to be sustainable. Yeah.
So you're not fighting the nearest competitor, you're actually fighting the big ones.
Yeah, the big ones, I believe, is the key takeaways.
Yeah.
This, yeah.
Okay. When we're talking about dynamics in the market, if you're talking about the nearest competitor, how do they look like compared to you? What is the difference between you and them?
Since this is a trend growing out of the Nordics, if we're looking at Norway, an example, the market for EV charging, or the need for EV charging, was moving so fast, so that if you're looking at the value chain, they just kind of jumped over a few steps. Whereas in Sweden, we had the opportunity to be both handling distribution through our partner installers, acting as both as vendors and installers, which is a great and somewhat the foundation of EFUEL. This has helped us provide an installation service and also build up a strong sales throughout Sweden. And I would say the other ones on the market who do this is Rexel, Ahlsell, Selga, the old traditional distributors for electronics, electricity.
Yeah, go for it.
Follow up on that and the ecosystem. Do you foresee any of the actual manufacturers of boxes to also sort of move forward and offer the type of services that you do and payment and stuff like that? Or how do you see the market developing? And on that topic, and maybe not for you, but is it on the agenda for you to maybe even buy charge box manufacturers, or is that totally against your strategy?
I think we're hardware agnostic when it comes to that sense. I think it's an ever-changing landscape when it comes to the products, and I think also for the foreseeing next future, I would say that the EFUEL services, which more people will be moving into, we have a great advantage of having a customer relationship where we deliver the boxes, we can also deliver the services. I think it's hard to move into this landscape if you're only delivering services or only delivering boxes. And I think that's the sweet spot for us. We can have the control of the whole value chain.
I have one more question since you mentioned hardware. You talk a lot about own brands, and obviously that is very interesting in the EV charging segment. Could you elaborate on when and what you're planning to do there?
I can tell you more about that in the future, but we're not looking at developing charging boxes. We're looking at other categories around charging.
Fair enough. Thank you.
So there's quite a lot of questions on the future, Rasmus. Can you elaborate a little bit on EFUEL in 5 years?
Yeah, as I said.
What do you have in your head?
I mean, the goal is to be the leading company in Europe, and I think if you're looking at the market in Europe, we had the chance to be, or how should I say, we had an early mover advantage in Sweden, and I think moving out in Europe, we will also be having that early mover advantage, being an early player in an early market, making us a big player in a big market.
Right. I have to ask a question on the business dynamics. Is there some sort of conflict between you or the company and while you go directly to the consumer, but you bring the installers on that journey? Is there an integrated conflict in that business dynamics?
I think we see a change in business models in general, and I think as long as you do it together with the partner installers and vendors, because we have to share the revenue together with them as well. But this is, I wouldn't say this is a conflict. We rather strive on providing the best service for the customer with a great customer journey.
Yeah. Right.
Hi, Eric from ABG again. So just on the growth target of 70 to 100%, which I believe is a bit higher than sort of the broad market. So I was just wondering if we could break that down a bit. Partly if it's some specific niche expected to grow that rate, and how much is coming from sort of geographical expansion versus
Nothing is
same
coming
market
from.
growth. Nothing.
No.
Okay, could you sort of break it down? Because I believe it's a bit above the market estimates that I've seen.
Sorry, I didn't hear the last.
It's a bit above the market estimates that I've seen, so I was just wondering where you're getting the 70 to 100% from.
That's the forecasted growth of the EV charging market, according to how the sales of EVs in Sweden look over the next coming years.
Okay, so it's specifically for Sweden.
Yeah.
Other questions? Okay. Yeah.
Yes, the geographic expansion, when it takes place, will that be done organically or through acquisitions?
Well, it will be done in the most suitable way.
Yeah.
But is it possible to do it organically, or do you need to?
Yes, it is.
Yeah, I think.
And it is possible to make it through acquisitions. And we will pursue the most suitable or efficient way.
Yeah, I think it's depending on the market as well. But
Yes.
we built a strong platform that makes us interesting to new markets, and I think it will suit both the market and us very well to offer that kind of service to the end consumer.
And I guess being a part of this, it makes it easier to do it organically than if you were,
of course,
to be alone.
Of course.
Go for it.
Just while I have the mic. On your long-term targets, what kind of gross margin do you need to move up to above 8% EBIT margin?
We've done quite careful calculations of the whole financial dynamic of that journey, and also the growth in exports for own brands, how the share of gross margin with other distributors in Europe should look like, and the capital dynamics. And we ended up at the 25% gross margin with a mix. Is that equation will yield 25% in gross margin, which will yield the 8%. Because it also is based on scalable growth with efficient base plates in these entities will give a more efficient, EBIT efficient growth. So that's how it ends up. You should have a meeting with Philip so he can show you the financial model.
And in that 25%, how big share of own brands does that mean?
That means about 50%.
Where are we now?
Where are we? 25.
Yeah.
25.
All right. Do you have any more questions from the crowd for today? No? Awesome. That means that we must have prepared quite an elaborate presentation plan, though. So we basically want to thank everybody for attending here. Thank everybody for seeing this at home.